everyone, it's Matt here. Welcome back to another episode of Savant's Tech Talk. Bitcoin and crypto in general are such volatile assets that many traders actually prefer to invest in them because even though the risks are high, so are the incentives. So this means that trading crypto can provide more significant returns than traditional investments if you can time the market correctly. Crypto traders usually have one of two objectives: collecting Bitcoin or making a profit in US dollars. In a bull market, increasing the value of a portfolio in US dollars is relatively easy, but increasing the value of Bitcoin is more complicated. You can trade altcoins against Bitcoin on platforms like Coinbase Pro to keep track of your portfolio's worth. In today's video, we'll look at everything you need to know to start trading crypto and maybe even start making some money. We'll look at what crypto is, selecting a crypto asset, how crypto works, the steps required for crypto trading, and the pros and cons of crypto trading. As always, if you find this topic interesting, don't forget to let us know by hitting that like button and subscribing to this channel for more videos. You can also let us know if you find it interesting by saying so in the comment section down below. Now let's jump into it. So what exactly is cryptocurrency? Even though cryptocurrencies come in different forms, they all have one thing in common. They're all decentralized, running on blockchain technology. Cryptocurrencies, by decentralizing financial processes, provide various advantages over the old financial system. And this includes almost all of the bank's overhead expenditures are eliminated. Transactions that are less expensive and can be delivered and received worldwide. There's no reason to trust the Federal Reserve because of inflation or a finite supply. Trading strategies and loans, for example, can be programmed directly onto some cryptocurrency blockchains, eliminating the need for financial intermediaries. If you haven't already guessed, Bitcoin is the most popular cryptocurrency and is referred to as digital gold. Bitcoin is essentially a commodity that serves as a store of value. With a market capitalization of more than $336 billion, Ethereum is the second largest cryptocurrency. On Ethereum's blockchain, developers can write smart contracts to offer decentralized alternatives to traditional financial activities like lending and trading. Selecting a crypto asset. Even though there's no single best coin, there are best cryptocurrencies for specific applications. So for example, Bitcoin has the most widespread adoption and a finite supply. So it's considered the best cryptocurrency to use as a reserve asset. The majority of the best cryptocurrency projects are amongst the top 50 in terms of market valuation. Also, the majority of small cap cryptocurrencies have questionable use cases or have failed to deliver on their promises. And small cap cryptos are much riskier compared to Bitcoin or Ethereum. Also, it's vital to invest in cryptocurrencies with a strong team behind them. Also, studying the white paper of a cryptocurrency also helps by understanding the project better. Cryptocurrencies that use decentralized financing, also referred to as DeFi, are among the most popular altcoins in 2021. And in case you're wondering what an altcoin is, basically any cryptocurrency that isn't Bitcoin is referred to as an altcoin. DeFi tokens are usually programmed on Ethereum's blockchain and use code to replace traditional banking services. Yearn, Finance, Compound, and Uniswap are among the most popular DeFi tokens, with gains of over 500% in the last 6 months. So how does cryptocurrency work? Cryptocurrencies are digital assets based on blockchain technology. For each node that powers the blockchain technology retains a ledger of every transaction on it. Nodes are computers that are connected to the blockchain network and used to mine it. If one of these miners tries to enter a false transaction, the correct ledger will nullify it. The majority of miners' records determine the correct ledger. In theory, a 51% attack could be used to hack a blockchain by controlling 51% of the cryptocurrency's network. However, this is monetarily unfeasible and would necessitate a highly orchestrated attack involving billions, if not trillions of dollars. To make a Bitcoin transaction, you'll need a set of public and private keys. These keys are similar to passwords that your cryptocurrency wallet generates. People can transfer their cryptocurrency using your public key, which is linked to your wallet's address. Only you have access to the keys that are used to approve transactions received from your wallet. Contrary to popular belief, many cryptocurrencies don't have a finite supply. Though Bitcoin's total production is limited to 21 million coins, several altcoins like Ethereum have a defined inflation rate, but no limit on total quantity. Now let's have a look at the cryptocurrency trading steps that are required. Now the first step is to sign up on a crypto exchange. The best crypto exchanges to register with include Coinbase, Gemini, and eToro. All three have a straightforward user interface and a wide range of altcoins that are available. Opening an account is pretty straightforward. You'll need to provide personal identification information just like you would with a stock exchange. When you make an account, you'll need to submit your address, date of birth, email address, etc., etc. Next step is to transfer funds to the account. Connect your bank account once you've signed up with the crypto exchange. The majority of the exchanges accept bank deposits via debit cards and wire transfers. Wire transfer is usually the most cost-effective way to transfer to your account, plus it's free on Gemini and Coinbase. The third step is to choose a crypto to invest. The majority of crypto traders put their money into Bitcoin and Ethereum. Because these cryptocurrencies have more predictability than smaller altcoins, trading while utilizing technical indicators is also possible. Many crypto investors put a portion of their money into minor cryptocurrencies. Although they're riskier than large market cap cryptos, small mid-market cap cryptos have more potential to provide higher returns. Also, minor altcoins have gained over 1,000% in just a few months. This makes them appealing options for risk-averse investors. The next step is to choose a strategy. There are many indicators to select from when it comes to trading crypto, and most traders evaluate based on many criteria. If you're new to investing, a Bitcoin trading course can be an excellent place to start. If you're a seasoned trader, then you might already have a stock trading strategy, and crypto trading tactics are similar to stock trading strategies. For instance, Elliott wave theory is a trading approach that many traders use. It focuses on the psychology of market mood, making it ideal for speculative assets such as cryptocurrency. And the last step is storing cryptocurrency. If you're actively trading cryptocurrency, you'll need to keep your funds on the exchange to access them. But if you're planning to hold for the long term, then purchasing a hardware wallet can help to keep your funds safe. Software and hardware wallets are two different types of cryptocurrency wallets. Both are safe, but hardware wallets provide the most protection because they keep your cryptocurrency on a physical device that's not connected to the internet. Now let's look at the pros and cons of crypto trading. Let's start with the pros. Some of the pros include a high potential for returns on your investment. It's another option to diversify your investment portfolio. There's a limited supply of Bitcoin. You get protection from devalued currencies and rising inflation rates, and growing acceptance and usage. Now let's look at the cons. The cons include the potential for high losses due to the market volatility, the ever-growing list of cryptocurrencies being launched stagnating the market, limited acceptance and poor store of value, and it's also unregulated and therefore susceptible to exploitation by scammers. Crypto trading is not for the faint-hearted. You want to step into the world of crypto trading? Then you better be ready to lose money, because it's not an instant recipe to becoming an overnight millionaire. It's a highly volatile market with its pros and cons. Keep in mind, doing your research and then making an investment is extremely important. Also, diversifying your portfolio will also help in cutting down losses. Crypto trading is a viable option to invest and make money, but risks are high. So there we have it. We've looked at what crypto is, selecting a crypto asset, how crypto works, the steps required for crypto trading, and the pros and cons of crypto trading. Once again, if you found this video interesting, don't forget to let us know by hitting that like button and subscribing to this channel for more videos. Thank you for watching.